Hi, in this video I'm going to do a breakdown of some forex currency pairs, EURUSD, USD and EURJPY as well. So remember, in every video when I start with the USD pairs, I always look at the DXY first, which is a dollar index, indicates where the dollar is going next. So if you go tradingview.com, search for trading top left corner DXY, start on the weekly chart. So the weekly represents each candle represents 1 week of price action. You can see here I've trapped the price between your weekly support and resistance levels in blue. So here's your weekly support where it's respected it potentially 4 times. We're currently at the weekly support. Here you can see there's a resistance level here where price changed from bullish to bearish, it changed direction. So this indicates that this is a resistance. So we expect price to move between support and resistance, which it has done since March 22, so for the last 3 years. You can see here price is currently at a support region. So from here it is likely to reverse. So price can change from bullish to bearish. We do expect price to increase from this region here. It has had a slight fake out. You can see last two weeks ago buys pushed the price up. Could just be retesting it now, and I still do expect price to be going upwards. So if price has gone up from the weekly, we'll have to break it down further and go to a daily time frame so we can see further what's going on. So what you could do, you could update the weekly support and change it up to here. You can see here's a weekly support level here, so you could update it to there. So now price, if we go into the daily time frame, if we look at your daily levels, so we're going to be marking every higher low or lower high. So because price is in a downtrend, we're marking all the lower highs and the lower lows. So here you can see there is a lower high, here's a lower high, and here's your most recent lower high here as well. So see, these are your resistance levels on the daily. And then obviously support region here would be the most recent lower low, which is this one here. So if I mark these levels in red that I've marked with the blue lines, these will give you your daily support and resistance levels. So I'll just show you now. Here is your daily resistance, another daily resistance, another daily resistance, which is here. And then obviously you got here your daily support. Where's the lower low? So price always moves between support and resistance. Price was at this daily resistance. It looks to be going down to here. Once it goes here, it could reject it, go up to here. It could go back down, or it could breach it, retest it and go up to this one here, to this one here, like so. So price always moves between your support and resistance levels. So that's how we trap the price. Right now we can see price has rejected the daily resistance, so it looks to be going down. We can expect it. Look, you got 1, 2, 3 days of bearish momentum. Looks to be going down to this level here. So once we've done that on the daily, you want to go to your H4 time frame and you want to repeat the process once again. So here I can see there is a price looks to be still in a downtrend. So you can mark here the lower low, here's the lower high, low, lower high. So I would mark this level here and this level here. So here is your support on a H4, here is your resistance on a H4. Price will move between these levels here. Right now, price has rejected the resistance. It looks to be going down to this level here. So if DXY is going down on a H4, that means your USD pairs will be going up on a H4. So that's how it works. So now we've analyzed the DXY. I assume DXY is going down, so I reckon there'll be buy trades on EURUSD and GBP USD. So there's only one way to find out. Let's have a look. So let's clear the chart, start from 0. Here you go. So you got your weekly, starting the weekly time frame, you want to mark your support and resistance. So here's your weekly support, here is your weekly resistance. Price is just above the weekly resistance, so we'll increase it to here. Otherwise you could clearly see this one was your weekly support here, but I've just moved it slightly higher because it's kind of had a fake out. It's had a massive rejection here, so that is your new weekly resistance. Go to a daily. You can see we're in an uptrend, so we're going to mark all the higher highs and higher lows. You can see here, got a higher low, here, higher low, here, higher low, and then obviously a higher high would be here. So where I've marked the black lines, that is where you mark your daily zones. Here. You got another here, high low. You got another high low here. And then obviously you got your daily resistance. So as I said, price moves between support and resistance levels. It will move from one daily support to a daily resistance. We want to trap the price further and get onto a H4 time frame. This is where each candlestick represents 4 hours of price action. So here you want to do the same. Because it's in an uptrend, you want to mark your higher high and high low. So I can see here is your most recent higher high. Higher, is it high? It's just a high, it's not a high low. Here. And then your high low, which is here. Price will move between these two levels. Remember I said on the DXY, it's going down on a H4, which means on USD, EURUSD, it's going up on a H4. So this is a good entry to buy right now. To be fair, this morning would have been better, but this one's a good candlestick. So I've highlighted it, the candle that I'm interested in. We're going to break the price down further on a H1 time frame. So this is your intraday trading level. When you're at work or uni or school and you want to monitor the charts, I recommend you on a H1 time frame. This is where each candle represents 1 hour of price action. So to mark today's price action, we'll look at the previous day's price. So I've entered these breakers here. So these breakers tell me each day's of price action split up. So this was Monday, this was Friday, this was Thursday, this was Wednesday, this was Tuesday, this is Monday. So Monday, Tuesday, Wednesday, Thursday, Friday, and then Monday, and then today's Tuesday. So if you're looking at Tuesday's price action, you always look at the previous day. So we'd look at Monday's price action. So we'd look at this one here. So I'm looking at this price action here, and I'll show you. So if you ideally want to do this before 8 o'clock in the morning, I didn't have a chance because I had meetings all day. So let's just say you want to mark it from the high of the day to the low. These would be your levels. This would be your resistance, this would be your support. So for the next day, so you'd mark it this for this day, which is Monday. For the next day, which is today, these would be your levels. So if price comes to this level here, we'll sell. Price comes to this level here, which is a support, we will buy. And I'll show you exactly how to mark it now. So that's the methodology you use. You then go on to the Fibonacci retracement tool, which is this one here. So as I said, get it from the high of the previous day to the low. This is the high to the low. Obviously price move further, so we'll drag it down. Then you want to mark your zones. So I like my zones in blue for H1. And here is another one, H1. Perfect. So I can remove this now. I'm now breaking it down further. So a good area to buy would be, so here's your 100, here's your 0. This would have been the best place to buy, anywhere near 0%. You can see in the Asian session, 3 o'clock in the morning, it was close to here. It retraced to 78.6. It then retraced to 38.2, which is this level here. This would have been a good area to buy. So the exact candlestick which would have been really good was this one here. And that was at 11 o'clock this morning. So that would have been a good entry to buy. So I've missed it now, because now it's 1 o'clock, half one. This would have been your TP. Stop loss just underneath the high low. And then you enter. So you're risking 16 pips to win 43. And obviously if you entered that trade, you would have been in a winning trade at the moment. So you're risking £160 to make £430 if you're trading £1 a pip. So that's a risk to reward ratio of 2.65. So anything over 1 to 3, anything over 3 is a good risk to reward ratio. So that is how you trade DXY in the USD pair. So we're over 10 minutes. I hope you enjoyed this video breakdown. Like, share and subscribe. Peace.